Episode 20, we're going to talk about price action versus indicators.
All right.
All right, Michael. So I'm going to let you elaborate on what is your fun facts about the two.
So I mean, I personally I don't like a lot of indicators on my chart. You know, you could use literally like 10 different indicators. I've seen the volumes, the Ichimoku cloud. I've seen, of course, the fibs. I've seen EMAs. I've seen this, that, and the other, right? But when it all comes down to it, the most accurate way to trade is literally utilizing price action.
Yes.
And when you start trading with price action, you can start seeing different things on the candlestick patterns in the sense of like I look at wicks, but I know where the price action is going to be going based on the bodies. So I can still see, and when I mark up utilizing candlesticks, it kind of gives me the like a double vision, so to say.
Yeah.
So when I can use the price action and trade very accurately with official price, I don't need this, that, and the other when it comes to the indicators.
Yeah.
And I've always said, you know, when you have tons of indicators on your chart, a messy chart is a messy mind.
Yeah.
One of those things is going to tell you one different thing compared to like maybe 4 or 5 of them, and then all of a sudden your whole mental gets messed up. So I'm good on indicators at this point. I mean, there were some that we used to use back in the day, and now just utilizing the naked trading standpoint of like utilizing past supports and resistance, low highs, high lows, etc. for TPs, trading naked. It makes it so much easier because literally utilizing the box strategy, I'm like, I mark this, this, and this. I'm done.
Yeah, I completely agree. Like, especially when I see people's chart markups and I see hella indicators, lines all over it's like a laser show. Like, damn. It's like I could have saved so much time if I went to play laser tag because that's all I see in the damn charts. Like, it's just so much complication. Like, you know, like if people focus on what price reacts to, you'll get better trade setups than that. Than relying on an indicator that's like, oh, I'm waiting for this price to come up to here, and then you miss it completely, and now all your confidence is gone. Like, you're like, damn, so I don't know where to re-enter.
Right.
You know, because now you're relying on everything on the indicator, and it's just like the indicator should not be doing the work for you. Seeing price action should be seeing everything.
Right.
Like, once you understand price action, you know, the candlestick patterns, you know, but mostly it's price action. You know, dealing where it coming up to creating new highs and market structure, like, you know, new lows, knowing your support and resistance. Like, trading becomes so much more simple doing it that way than having indicators. You having your RSY, you know, the MACDs, you know, your Ichimoku. Like, he's like, you know what? No, I like my charts looking, you know, very beautiful as I'm seeing like a beautiful woman. I'm like, damn, that's so beautiful, right? Just like how I want to look at my chart, so beautiful. Like, I get excited when I actually mark up my chart and, you know, TPs get smashed. And it's just like, wow, I had no indicators. It's so smooth. Like, you know, like I know what I'm reading. And once you know how to read on the market structure side and knowing where price is reacting to, knowing where it's going to come down to and seeing the rejections becomes so clear. So I want everyone that's on this live and everyone that's going to be watching this, please do yourself a favor. Remove any indicators that's on your TradingView platform and rely on using price action. Like, you're going to save so much time and you're going to see the chart so much clearly and knowing market structure, candlestick patterns, support and resistance. That is all you need. And people till this day that probably even participating or learning, you know, how to trade, they skip all of that. And they're like, is it a good buy or sell? It's like, you don't want to be asking for a lot of people. Like, this is the reason why I don't answer to a lot of people's analysis, because my mind is set on my markup, right? So if I'm wrong, cool, I move on. I'm not doubting it. I'm not questioning it. I'm not seeing how long I'm going to hold on to this trade. If I'm want to secure my profits, I secure it. Cool. So this is where price got rejected. Mark it up, see if price is going to come back there again, set my alert. Cool. You know, rather than relying on an indicator, which lags if people really don't pay attention to that.
Yep,
you
you
know,
said it.
and it's not giving you the best confirmation because every time when it moves, price is already moving faster than when that indicator is actually going to try to even set up on the move. So
Right, and using that term in the form of lags or delays. You know, so the whole point of being in this game is to be ahead of the market.
yes,
You're supposed to be 2 steps, if not 5 steps ahead of the market. And all you're doing with an RSI or an ADX or even the EMAs, you're actually using a reactive tool rather than a proactive approach.
yeah.
So your
Damn,
mental's already
I'm
messed up
dropping
already.
some sauce right now.
You know what I'm saying? So you're already your mental's already messed up because you're
Yeah.
like, damn, it's about to hit this 200 EMA. Well, you know what? That's cool, but where's price action telling you where it's going to be going?
Yeah.
So you can be ahead of the game.
Yeah.
So the other thing,
and that's what a lot of people, when they say it crosses 2 MA, and then they came and determined where market structure is currently at. So it's just like you're just looking at the charts. You're like, okay, now I'm not confident now if I should enter or not. You know?
well, and the other thing is, let's talk about trading evolution. So the only indicator or tool that I absolutely hate, but I think it can be useful if you use it correctly is the fibs.
Yeah.
Right? I hate it to death, but it is what it is. But trading evolution tells me like why the 61.8 to what is it, the 72 or whatever it is, like that's the golden zone, right?
Yeah.
And banks know that. So guess what? You're going to see certain pushes up to those numbers because the banks are going to do that on purpose. When you hit when the banks can be a step ahead of a retail trader,
Yeah.
then you've already lost. You
Yeah.
need to be on par with the banks,
Yeah.
right? So what happens when they start looking, okay, well, we've done the fibs. Now let's go ahead and force trades to go to this EMA and then get retail traders stopped out. Trading evolution tells me that is always going to be a possibility.
Yeah.
You know, so why not keep it? Why not be that mysterious one in the room to the banks where it's like, what's he looking at? What's he looking at? You know, what is he doing? What's on his mind?
Yeah.
No indicators. He's not showing us what he's using. Well, okay. Well, we're just going to make our normal move and let him react to it. I'd rather it be that situation than, again, to have trading evolve and then me have to go back and reinvent my whole self every single time.
Yeah. And that's what a lot of people. But we have a person that wants to elaborate on a question.
Okay.
So shoot your shot, my guy.
What about marking up your chart without any indicators on it, but having an indicator available after you've marked up to like as another confirmation piece? So using it as a confirmation?
What's your opinion on that?
Well, I mean,
All your markups completely bare,
Mm-hmm.
right? So
that's different because you're still marking off of price action. So what you're seeing, like we're talking about with the delay with a lot of the indicators, you're going to let it react and see where that indicator is going to go. You're still ahead of the game because you marked it up just by basically using market structure and price action. So in that case, it's fine. But a lot of people rely on those indicators to get into a trade. And that's where their mental is completely different.
Yeah, because like if you rely on it, you're just only relying on the past, and that's not what when it comes to trading, because we want to see where a market is heading to for the current price. So when you focus on always the current, you're not gonna need the indicators. It's not gonna like the indicators are not gonna give you what's gonna happen in the future at all, because yeah. So you're not getting no type of value from doing it that way. So then when a lot of people become so dependent and they wonder why they're not, want to be a beast of a trader, is because you're depending on the indicator rather than seeing what price is giving you, so and then you can react. So when you have that better reaction when it comes to price action, it becomes very, very simple. So, and that's where a lot of people get so confused and wonder why you guys are trading like retail traders, because you guys are getting stopped out every single time because the banks are not trading the way how you're trading because you're relying on indicators. So when you start trading as an institutional trader, then everything becomes open, and then you realize how trading really becomes a video game, like how I've always preached about. So getting entries is just like, wow, this is fire. Like I see the market completely different. I'm not making it so complicated. I'm making it as simple as possible.
Well, and think of the accomplishment though as well.
Yeah.
When you can sit there and you have all these tools at your hand on TradingView, and literally you use like what 2 or 3 of them, array, couple lines here and there, right? You're not using any indicators.
Yep.
But I can sit here and I can say, you know what? I don't even need all that other shit. I don't need it. Somebody else might, but I don't need it. That's a
Yeah.
sense of accomplishment that you can sit there and you can focus on the way market structure works, and that is going to make you even more of a beast trader yourself. You know, because it's a huge confidence builder. When the training wheels come off, I kind of look at indicators as training wheels.
Yeah.
You know what I'm saying? We all use them from time to time
we
at the
all
beginning.
started it. Like,
Right.
you know, like I would definitely won't say that I've never tried indicators in my entire life because
Right.
then I'll be falsely advertising myself. So, like, I did start with everything. When people tell me about this indicator, I was like, yeah, I did it. Been there, done that, you know, and that comes with the self-growth behind it. So, like, you know, it's training wheels, as you said.
Well,
you know?
and there's also the point where you could use an indicator, and that indicator or 2 indicators might show you a 40, 50 pip move, right? By trading with market structure, by trading with price action, there are multiple moves that we've caught that are like 200-300 pip moves. So why limit yourself to something that maybe an indicator is going to say 40 or 50 pips when you can have more confidence in yourself to turn around, look at a naked chart, mark it up, utilizing price action, and say, you know what? This tells me it's going to go 50 pips, but I feel like it's going to go 200.
Yeah.
You've just increased your opportunity 4 times. So, I mean, I don't know. I kind of see it in that sense, and that's where you're also going to have more of an accomplishment and satisfaction to yourself because you just caught a huge move that an indicator didn't even show you.
That's facts. Like, you know, just keep it as simple as possible. That's how a lot of people weren't taught to be because everyone is just always taught, oh, use this indicator, use this moving average, etc. Like, you know, so it's delaying you from the growth to the trading aspect of how you could really take this to the next level. But everyone's so caught up of using the indicators because that's what everyone's been taught to trade like as a retail trader. Like, you know, don't focus on price action. Don't focus on, you know, market structure. But we're focused on support and resistance, but people still seem to feel where they should mark up their support and resistance, which should be really, really common sense if you actually learn the price action point of view, knowing where price rejected. So then that becomes your resistance, and then seeing where the last low, that's where it becomes your support. So if it breaks, now you're waiting for the typical retest. But, you know, if it goes along with your current trend, then great, and then you got a nice, perfect setup, and you're now just riding the trend.
Facts. I would challenge anybody that's using multiple indicators, try removing one of those indicators, see how better you can see your chart, and see if you really actually needed that indicator.
Yeah.
Right? Then when that happens, remove another one short time after that. It's like I said, removing the training wheels off of the bike to where you can ride on 2 wheels with nothing except for just a basic markup.
Yeah.
And from there on, to me, like that's staying way ahead of the game. Like I said, you're the mysterious one in the room with the bank. When I would feel like the banks use maybe indicators to see where retail traders are going rather than to help them with trades.
Yeah.
So that, I don't know. I don't want to be in that position at all. If you ask me, I want to be that one that's like, hey, who's this guy? You know, what is he doing?
Yeah. So that's what it really comes down to. Like, if you really want to become the best of the best, you know, you got to know market structure like down pat, like the back of your hand. You got to know support and resistance. Got to know market structure. So, you know, the best of the traders I know don't use any of the indicators. So
Line charts are lovely when you use the line. Then when you can see the line within the candlestick, you can see everything
like,
at that point.
You know, it's like peanut butter and jelly that Preston likes to say, call it. You know, you can't have peanut butter that doesn't go with jelly. Like, you know, if they go hand in hand, then you got a great relationship.
Facts.
So everyone, if you want to turn and become the best version of yourself when it comes to trading, don't use indicators. Like, you know, like you could gradually get out of it from your own pace, but overall, you're not going to need it.
Yep.
Like, it's going to be really no point. You know, keep trading as simple as possible. You shouldn't be asking. I get so many questions regarding to like how to scale up, how to stay consistent. Keep it simple. Like, you know, have a trading journal. You know, like you shouldn't make this more harder than it should be if you understand those components. So, you know, and trading should be fun. Like I said previously, when I trade like it's a video game.
Mm-hmm.
And it's the best video game in the world because it actually pays. So when you're patient and you allow the market to move and come to you and certain prices that you're looking for, all you have to do is execution on that big thumb. So,
Would you consider yourself a conservative trader?
I would say 50-50. When I need to be aggressive, I will be. But when it comes to, you know, like re-entries, definitely conservative, especially with the lot size. So like just like even last week when I turned that 500 to 10K, I was being very conservative on the entry points so I could reap the benefit and eliminating and having the discipline of just securing my profit because I know at the end of the day I want to build equity so I could use bigger lots. I could start. Then that's when I got up to like at least like 5K. I was being more aggressively because I know what I'm able to risk now and just focus on getting the entries and then being aggressive to 10K. So then I was like, all right, at 10K, you know, it was up. I did that in 2 days, and I'm like, all right, you know, I'm kind of done. Let me just make my withdrawal, made a whole testimonial showing what it's possible, and then just keep it moving. So
The reason I ask is because I think if people start trading more conservatively and stick to that plan, like we've always said, stick to your trading plan, etc.
yeah,
I feel like when it comes to the indicator portion and to me like a weight being off their shoulders without having to look at so much, it kind of forces that conservative standpoint. And when you become conservative, then you start using correct lot sizes. You don't gamble as much.
Yeah, and it's a great way to be conservative. Like everyone should be conservative. Like you know, no one should be trading like how this person trade. Like you should trade whatever that works for you. If you're conservative, great. You know, you're using proper lot sizes, awesome. If you're aggressive and you have huge capital, then all means be aggressive.
Right.
You know, the bigger the risk, the better reward, right? But I highly suggest being conservative. The reason why is because you could able to trade for the next day.
Exactly.
And a lot of people's mindset is just like, all right, this is a new day. I'm gonna see how much I can make. You know, if I can make 1,000 today, and then like don't compare yourself to the other person.
And if I'm not mistaken, you manually closed those trades to build up that equity the way you did, right?
And mostly, if you guys like saw like the positions being closed, it was all manually. Besides that GN call that we caught for almost like 218 pips, blew all past my 3 TPs. So
Right.
So they manually closed MITP3, so it was just like, all right, cool.
And the reason why I bring all that up is because of the fact that trading conservatively and being able to decide when to manually close while you're up in profit, it all ties together.
Yeah.
It all ties together because how many times do we get, are we holding this or not? How are we holding this or not?
Yeah.
Well, if you can see where the market structure and price action is going and you don't need the indicators to mark up, that's going to lead you to trading conservatively, which is also going to turn around and give you the confidence to say, you know what, I'm just going to close this out.
Yeah.
And I'm going to get my profits, that conservative portion of it. So it all ties into a plan. And I hope that when people listen to this, whether they're on IG Live or whether they're on YouTube or Spotify or whatever, that maybe they kind of take that into consideration rather than trying to gamble and being very, very loose with the money, so to say.
Yeah.
You know, because, I mean, you could sit there and you could throw a standard on a, $200-$300 account, but why would you ever want to do that? You know?
So and that's where it comes down to is that then when you know, those 4 components that we just listed, and your charts is clean, you could see how you could really be conservative where market is actually coming down and it goes back to retest. So like anytime, a very, very key factor I want to actually tell everyone, when you're actually seeing a big move pushing to the downside as a bearish trend, always expect some low consolidation, and it has to retest. It has to go back up. Like people think like when the market is just going to come down, it's just going to come down dramatically. That's if we have some crazy news that influence that move to keep pushing down. So we have to see a retest before it comes back down, because that's just textbook setup. Like that's when you're allowing the market to come to you and then reacting.
Yep.
And I know gold did that a few times. You know, it came down, it retested, and then it came down again. And then that's when it started to push up because it got rejected. So it created that high-low opportunity and took off. So that is just with market structure. So that's how you're able to read the charts, like perfect. So it already made its low, perfect, created its high, came down, was looking to create a high-low, got rejected. That's a confirmation. So that's the best confirmation you could get that an indicator can never tell you. Because the indicator is just going to be in between the damn candles, and you're going to be like, oh, it's below the candle, so it must be a buy opportunity. And then you're like, no, it went up. It got rejected below that same moving average, and then it shot all the way down.
Right.
So that's what it comes down to.
Facts.
Do you have any questions to elaborate on price action versus indicators?
Your only indicator should be your alert.
Yeah, I don't even use it.
Yeah.
But like, I just think that when I see them, I'm like, yo, because I don't know how indicators work. So when I see indicators, because I've never traded with them, I see them, I just think like it's just a line going through the damn chart. Like it's gonna hit every single thing, regardless if you don't know what's going on.
Mm-hmm.
So you can never really rely on it. At the end of the day,
Some people are fairly successful with it,
I don't know.
but they're like I said, they're catching smaller moves.
Do you think you need them to learn? Like, can you learn how to trade without ever using them?
Yeah, it's very possible.
Yeah, you can.
I feel like it's more easier because you become more independent on knowing what you're reading and seeing compared to indicators. Because like indicators will tell you, it will take your focus away from learning the correct way than just being so damn dependent. So if you miss that move, it's taking all your confidence away. It's not giving you any more confirmations beside that missed entry. Like how many times you probably use an indicator and you're like, damn, it came down to this price area before it took off. And then it takes off and you're like, now you're frozen. You're like, where do I re-enter?
Right.
Like, I don't know. Like, I don't know market structure. Is it going to come down to create a high-low? Like, I don't know what that is. Like, price action. Like, I don't know where price got rejected to. Like, and then lastly, it comes to the patterns. You're like, damn, I don't even know what an inverted head and shoulders look like.
Right.
Because you're so damn dependent on the indicator.
Well, I would find it easier because you're not weighed down by all the options that are out there for indicators. But
Yeah, there's millions of them.
yeah, but I will say that by the way everybody uses them commonly, I would think that a new trader, the first thing that they're going to do is have questions after question after question. What is this line on here? What is this tool? What is this indicator? Like, what are these things on here? So there is a benefit to starting out utilizing them. So this way you can understand how they work and see what works for you. Somebody just might need one little EMA, and that helps them. Cool. If that helps you, by all means, that's up to you. You know what I mean? But I'd rather have that experience. Like I have the experience with a lot of those tools and indicators, and I'm like, I don't need those anymore. So that's just the growth that I've had within myself. But to each his own. Whoever wants to use them can use them, but at least you get that education and ability to know, okay, I can use this or I don't need to use this. I can use this and not this, right? So it does have its benefits to learning when starting out, but I would prefer to not use them at the beginning. So then this way I'm not, weighed down by all the options that are out there, and I just say, fuck it.
Yeah, because trading is a long game. So regardless if you did start with it or you didn't, you're still going to learn, the ins and outs and how it could benefit you long term and how you want to be the best version of yourself. So
I say that you do have your benefits with it, but I feel like a lot of people too, they use indicators and they don't hold themselves accountable.
yeah,
Because they can blame the indicator.
yeah, they were like, oh, the indicator was so wrong, like
Yep. Well, and that trading naked forces you to become accountable because
Yeah.
it's what you saw. So I think you learn more from that because whenever you take an L and it's a lesson, what is it that I saw? What is it that I saw? I don't have to.
That's what I always like to say. Do you sleep better with clothes on or naked? This is how I like my charts. Naked, nothing. This is how I read the charts better.
Analogy, bro.
It is better.
That's a great
I know a lot of people's gonna laugh about that
I'm
one,
not.
but
Hey, I'm not. I'm not. Yeah. SpongeBob.
so
No, it is.
So another analogy. So will you have sex with clothes on or no clothes?
Hey, with clothes, you could be in and out mad quick,
So
right?
when you look at the charts, and you have
No, for real.
and you look at the charts, you have hella indicators. Do you like it naked
Using
or a clouded chart?
Your condoms are your indicators.
Yeah, you know.
I got 12 of them
Hey.
on.
Hey, no, it's just a little sense of humor. So
Hey, we bring in the jokes. We bring in the jokes. But no, I feel you.
yeah, so that's what it really comes down to. Like, you know, like you see it more clearly when it's just clear. Like, you know, able to read, simple. You could actually elaborate and break it down to a person that wants to learn. Like, hey, this is what market's doing, you know, with the textbook setups. And yeah.
Facts.
And all right. I think that we're tapped out for episode 20.
Tapped out.
And we all hit our TVs.
That's classic. Holy shit, that's classic.
Oh man, I know, right? I need to get really creative for this one. Oh my god, yeah, we gotta create a meme for when people are in hella drawdown and looking at the MT4 like,